Good evening, ANMI members and our guest speakers. Today, we are happy to bring you ANMI WR 100 Knowledge Series webinar on alert management in association with TrackWizz. There are various alert management knowledge series webinar on alert management local level in association with TrackWizz. Today, we will explain how to effectively manage alert from all your monitoring tools. I welcome our speaker, Mr.Sagar Tanna, founder and director TrackWizz, and Salunkhe, Senior Business Analyst, TrackWizz. Now I request our guest speaker to address our member on the subject.
Yes, okay. Right, Mahesh, we are before time. Okay. Right, Mahesh, we are before time. Okay. Right, Mahesh, we are before time. Okay.
Sir, I request you to please close your YouTube tab so that you don't have any resounding, if that may be fine.
Yes. I think this is better. Thank you, Aditya, for that. Okay. Yeah, sounds good. Thank you, Mahesh, for having this arranged. And I'm not sure how the day looks today because the markets are in red. We're more than 400 points down. India with England is not doing that great.
Right.
So I'm guessing that means that we will have all the attention focused here on the webinar, which is on the transaction monitoring piece. Before we get started, and I have my colleague with me, Saili, who's walking us through the presentation, I would like to talk about a couple of things. Firstly, one of the second largest crypto exchanges in the world was declared as a bankrupt or defaulter, right, in the last 2 days. That does actually mean a lot. And if you look at the valuation of this company in January, it was actually $32 billion, right? And it finally got sold yesterday for $1. Right? So everything was wiped out. That's the time and age, that we are living in. And I must appreciate and acknowledge that the regulators in India, SEBI, RBI, have done a reasonably, I would say, good job at least preventing our country, our nation from such very large shocks. And yes, that has primarily been because of the regulations, the prescribed regulations, that are increasing by the day. And it does increase, effort for all of us. But at the same time, we are insulated or protected from some very large shocks. Now, the topic for today, I thank Mahesh and me, whole team, to be picking this up, because recently the FIU has released supplemental guidelines, and when they were in Mumbai last month, we had an opportunity to, understand from them in terms of where we are heading. So naturally, this is, very, 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 very serious. And I'm hoping that the session today will help all of us to get a little bit more clear. And also, if there are any questions, we request you to put them on chat. In the interest of time, we'll try to address as much as we can. But if there are some additional questions that spill over, we will, through ANMI, come back to you with our responses. With that, I will invite my colleague Saili. Saili is a certified financial crime specialist and does help many institutions, working with many of you in this area on alert generation. So over to you, Saili, if you could take us through the presentation, and post that, we'll pick up if there are any questions or answers.
Hi, good evening, everyone. Once again, welcome to the session. The agenda of today's session is to give you an overview on what are the best practices that you can follow while you are working on the transaction monitoring alerts that are prescribed for all the SEBI registered intermediaries. And also, what are the obligations of you as a SEBI registered intermediary? What is the minimum regulatory compliance that you need to follow? So before we go ahead with the agenda points, I just want to highlight two different perspectives with which you need to look at an alert while you're analyzing it. One is money laundering and the second one is surveillance. So whenever you're analyzing an alert from money laundering perspective, you're trying to identify if the funds that the person has invested, has it been earned through an illegal source? On the surveillance part, you are trying to verify if there's price manipulation, if there's insider trading, is there synchronized trading that two investors are doing among themselves. So these are the two important perspectives that you need to keep in mind whenever you're working on analyzing an alert. And regulations related to money laundering are given by FIU, is given by SEBI. Surveillance, the exchanges and the depositories, they keep on publishing circulars as to what can be done from surveillance perspective. So with these two perspectives, let's have a look at what is the minimum regulatory compliance that you need to follow. So transaction monitoring obligation of a trading member and stockbroker, trading member and a depository participant. So this is one slide that we normally use in all of our presentations related to transaction monitoring because of the importance of this slide. So along with the alert analysis, it is also important for you to know what is it that needs to be done as a minimum compliance. And this kind of gives you an overview on that aspect. So if you have a look at the slide, it has been divided into 4 different components, and the first 2 blocks which are highlighted in gray. So there are 2 types of alerts that you need to analyze. One, the ready alerts that are provided by the exchanges and the depositories. And second, there are certain typologies that have been prescribed wherein you need to generate the alerts in-house. So starting with the first block, which is related to the exchanges. So NSE, BSE, NCDX, MCX, they all have their surveillance portals wherein all the transactions that your customers have done and they have identified as suspicious, they provide these as alerts to you. You have to download these alerts and you have a time period of 45 days to work on it, do the analysis and submit your report to the exchanges. So that's on the exchange part. Second, the depositories. So for safeguarding all the demat account related transactions or monitoring them, CDSL and NSDL, every fortnight, there's a file that is given. You need to process that file, analyze it, and identify if there's any suspicious activity. So previously, there were 5 type of alerts that were given by CDSL, 9 type of alerts given by NSDL, but the recent circular that FIU has released on supplemental guidelines of AML, there are 7 new types that have got added. So total 28 type of alerts of depository needs to be analyzed. So these are the ready alerts. Now moving on to the themes that have been prescribed, wherein in-house alert generation is needed. So starting with FIU in the year 2016, they had released the first guidance note wherein there were 11 typologies that were prescribed covering the equity and the derivative segment. In 2018, there was one more guidance note specifically for the commodity market. And with the 2022 supplemental guidance, the total themes that FIU has prescribed are 32. So these are the themes that you need to utilize and generate alerts basis that and file an STR if there's any suspicion that you identify. Similarly, for surveillance, the exchanges and the depositories have released circulars like abnormal, non-genuine trade, clients, group of clients concentrating in a particular script. So these are the typologies that they have prescribed. So there are total 26 themes that the exchanges and the depositories have given that you can utilize for in-house alert generation. So in total, 90 type of alerts and 58 type of themes are minimum regulatory compliance for a SEBI registered intermediary, specifically a trading member and a depository participant. And once you analyze this, the suspicion could either lead to market manipulation, it could be a case of insider trading, tax evasion, money laundering, or terrorist financing. So it could be any of these. So with the minimum compliance, now let's have a look at the important aspects or the fundamentals of the alert generation or analysis process. Based on our understanding, there are three important aspects to it that we'll highlight today. Starting with one aspect which we think that users don't realize the importance of it, and there's very less attention that is given to this particular aspect. So I'm talking about data ingestion. So there are thousands and lakhs of transactions that are happening on a daily basis, and processing these transactions manually and generating an alert for them, and also keeping in pace with the changing regulatory landscape. I mean, the number of scenarios that need to be utilized for alert generation are quite high. So normally, most of the institutions have a transaction monitoring application in place that can help them in creation of the alerts so that they can just focus on the analysis part. Now, for any transaction monitoring application, the source or the main information that is required to generate alerts are certain data files. Like for capital market, you need trade files, you need DP transactions, you need pay in payout transaction, holding records. So there are quite a lot of files that are needed. Now let's take an example that there are 10 files that you need for generating an alert. Now, out of these 10 files, only 7 files get uploaded successfully. 3 files get failed during the data merging process. Now, in this scenario, if the user has a look at the notification that the application has sent, but doesn't take any action, so doesn't re-upload the file or doesn't rectify it, this would lead to partial generation of alerts. Now, partial generation of alerts is definitely a big risk, because what you would do is go ahead and analyze those same set of alerts, and basis those alerts, you would file an incorrect report to the exchanges or to FIU. So this is one big risk which needs to be considered, and data ingestion is definitely an important aspect. And to make sure that you're not generating partial alerts, you're not doing an incorrect reporting to the regulators, you need to have a process in place wherein you validate the information that is getting fed into your transaction monitoring application. So on a daily basis, check if all the files have got uploaded, is there any failure? If there's a failure, take necessary action, and also automate this whole data ingestion process. So if there's one person or human who comes to office daily and then uploads the file, it could happen that that person could miss out merging a specific file, or the person goes on leave and then the data merging doesn't happen, which will then also have an effect on the alert generation. So automate the whole process, validate the completeness of data so that at least the source that is required, the main information that is required to generate the alerts is proper. So data ingestion is one aspect which we think everyone should pay attention at and make sure that the information is updated. Moving on to the next steps aspect, which is the timely disposal of the alerts. Now, the data ingestion process has been sorted, proper information is coming into the application. The alerts are getting generated, but are not getting disposed of timely. So the whole effort that you put in data ingestion kind of goes to waste, because you're not analyzing the alerts as and when they are getting generated. And why do you think this would be happening? So let's take a scenario. if at all, there are 3 members in the compliance team or the AML team that are purely working on analyzing the alerts. Now, for these 3 members, on an average, if there are around 700 alerts that get generated, what would happen? So if one person spends, say, 3 or 4 minutes in analyzing these 700 alerts, they'll not be able to complete all the 700 alerts in one single working date. Some of these would go ahead for the next day or day after. Now you would say that, okay, the alerts shouldn't be analyzed on the same day. You can analyze it within the next 7 or 8 days. But what happens is, this is not just a one-time thing wherein 700 alerts are getting added. On a daily basis, if the count of alerts that are getting added is much more higher than what the team can actually work on, it would lead to piling up of the alerts. So there would be a big backlog that would get created. And in the end, the team would be lost. The compliance officer would be stressed as to what needs to be done now. There are so many alerts that are pending. And it could lead to a situation wherein you bulk close the alerts. The risk of bulk closing is that you may miss out on a suspicious activity, which you would have identified if proper time would have provided to alert analysis. So making sure that proper alerts get generated, get generated as per the team strength that you have. And if at all you are in this scenario right now, or if you want to avoid being in such a scenario, we recommend some steps, out of which the first step is proper backtesting and simulation of data. So even before you make a particular scenario live for alert generation, doing a thorough backtesting activity is very important, because during the backtesting activity, you would be uploading trade files, you would be uploading actual data, you will set threshold. It will give you an understanding of the volume of the alerts that would get generated on a daily basis. And it also helps you to understand the logic of the scenario. So on what basis is the alert getting generated, which will in turn help you for alert analysis. So thorough backtesting to make sure you have an understanding of the volume and also the type of alerts that you're receiving. This in turn would also help you in adequate resource allocation. So once you know that, okay, on a daily basis, these are the X number of alerts that will get generated, I need to add 1 more person, or I need to add 2 more people in my team, so that on a timely basis, these alerts are analyzed. So one more point that I would like to highlight here, backtesting should be a continuous activity. So if at all you're using one particular scenario and you have tested it in Jan, we recommend that a periodic review of all your thresholds is a must, because when you started in Jan, maybe you had X number of customers. In October or November, it could be 3X, 4X. So the count of customers could go high, the transaction volume would have increased. Also, the analysis that you do, you get a lot of insights, and you can use that insights in setting the next set of threshold. So periodical reviews of thresholds is also an important point to make sure that you get quality alerts. And the last point in this particular section for timely disposal is to have proper team members who are upskilled and who are aware about what the objective of the activity is. So even if you have good number of team members that are available for alert generation, but if they are not aware of the AML guidance that FIU has given, they are not aware of the compliance, they are not aware about the industry, then they'll not be able to effectively work on analyzing these alerts. So continuous upskilling of team members, making sure that you're training them so that they are able to do their job perfectly. So timely disposal is the second component, which is important from alert analysis. Now moving to the last component, which is reporting. So all the effort that you are putting in, having a system in place, generating the alerts, having a team, all the effort that you're putting in is to make sure that whenever you identify a red flag, whenever you identify suspicion, you present it as a case in front of FIU, who's the judge. So FIU doesn't have access to customers. So when you file an STR, they are completely dependent on the information that you provide to them. And if the information that you're providing in the STR is incomplete, they'll not be able to process it and take the necessary steps, which in turn will make all the effort that you have put in of no use. So you being the first line of defense, you being the reporting entity, you have access to the transactional data of the customers, the KYC records. You can speak to the customer, try to understand what exactly they are trying to do. So it is very important for you to articulate that information in a proper manner, present it in a report in such a way that if a third person comes in and reads the report without additional information, they are able to identify what that person is trying to do, what that suspicious individual is trying to do. So that is what FIU is looking for from the STRs that you have filed. And as Sagar mentioned, that FIU has also been reaching out to institutions for the quality of STR. They're coming up with a FinNet 2.0 portal. They're trying to make the whole process user friendly. So there's not going to be any reduction in the compliance or in the rules. There's definitely going to be an increase. So we need to make sure that we are prepared and we have a proper understanding as to what needs to be filed as a part of the STR. So talking about the important aspects that you need to send in each and every STR. First is the ground of suspicion. So out of the complete STR, this is one of the most important section. FIU had released a circular to all the principal officers wherein they had listed down a list of fields that each and every ground and suspicion should have. So KYC profile of the customer, a summary of their transactional information, and also detailed reason of why do you think that this particular person is suspicious. So the ground of suspicion needs to have all of this, a proper paragraph of how you arrived at the conclusion that this person is involved in money laundering. So GOS is an important aspect. Second is the details. Second are the details of investigation. So the review process that you have followed, what are the steps that you followed that helped you to conclude that, okay, this person is involved in money laundering or terrorist financing. So these are the two most important parts of the whole STR that you file. And in addition to this, there are other aspects like if the STR is being filed for a legal entity, you need to provide details of the beneficial owners, the transactions that you are sending in the STR. You need to send the transaction from the start of the current financial year so that FIU is able to process it and identify if there's any trend that the person is following. So these are the components that would help you to provide a proper information or proper report to FIU so that they can take necessary steps. So to conclude the fundamentals of alert generation, three important aspects. Data ingestion, you should have proper data ingestion system in place. The information should be validated on a periodic basis. Second is timely disposal of alerts. All the alerts that are getting generated, make sure that the team is able to handle all of those alerts on a timely basis. These are getting disposed of. And lastly, regulatory reporting. The STRs that you are filing to FIU are detailed and have proper information of what suspicion the person is involved in. So these are the three important aspects of the whole alert generation and analysis process. Lastly, talking about the key areas that you need to focus on whenever you are analyzing an alert. So when there's an alert that gets generated, these are some pointers or checklist or things that you need to consider for completing the investigation. First, review the details of the alert. What is the information? Is it significant contribution in a script? What is the turnover? So details of all the details of the alerts. Second is go through the customer's KYC profile and financial details. So it kind of gives you an understanding whether the transactions that the customer is doing, is it in line with the profile of the customer or seems to be funny. So customers KYC profile and financial details. Next, you can also review the screening and risk profiling outcomes. So in addition to transaction monitoring, for a complete AML compliance process, screening of your customers, wherein you are trying to see whether the person falls in SEBI debarred or United Nations sanctions or MHA list is important, and also risk profiling the customer into high, medium, and low. So these two activities that you do prior to transaction monitoring help you as an input when you analyze a particular alert. So review of screening and risk profiling. Next, you also need to assess the transaction pattern. So alert gives you a consolidated view of what is the total turnover or contribution. But when you go through the transactions, you kind of get an understanding of the pattern that the person is following. So assess the transaction pattern. You can also have a look at the historical alert. So if for the same person, there was any previously created case or alert in the application, have a look at that as well. Identify what are the transactions that have happened in related accounts. So if there are multiple accounts that are related to the individual that you're investigating, go through the transactions that have happened in that account. Script activity can also be checked on the exchange. So the script in which, or the company in which the person is investing, you have the market data that is available. You can see how the price has changed or how much volume was there on that particular date. So review all of that information. Is the person significantly contributing to that script? Is the person related in some way to the promoters or shareholders of that the significant shareholders of that script? Have an interaction with the client without tipping them off. So if you think that basis the KYC that the customer has provided, you're not able to identify, or you don't have sufficient information, in that case, reach out to the customer, try to get a rationale of the transaction that they have done without tipping them off that it is a AML related investigation or surveillance related investigation that you're doing. And lastly, do a adverse media check. So go to Google, type the person's name, see if there are any adverse news article related to the individual that you're monitoring. So these are some pointers that you can utilize while analyzing the alert. And this would give you, all these checkpoints would give you a holistic view of what the person is trying to do, and it would also help you to file proper STRs and report it to the exchanges as well. So with this, I conclude the session. I hope these 20 minutes would help you in your day-to-day alert analysis activity. And I would also like to thank Mahesh sir, ANMI, and Sagar for giving me this opportunity to present this topic to you all. We have some time left, so if anyone has any questions, you all can put in the chat box and we'll answer it till 5:15. Thank you.
Thank you, Saili, for that lovely session. I think these are some very, very common areas that we've seen with many members, many institutions, where the data ingestion, we've seen some very large incorrect reporting that has happened because of the data ingestion not being streamlined. We've also seen, I would say the imbalance between the number of people who are disposing the alerts versus the quantity of alerts, right? And this is not with a small or a large institution. So a small institution, let's say has one person who is looking at the alerts for 2 hours every day versus a large institution who might have a 5-people team. But in both cases, the number of alerts are large in what they can close. And it is for all of us. Like, our first impression is we want to cover everything. We want to be very conservative. So with that in our mind, we go with thresholds that are lower. And say, for example, instead of setting a threshold at 25 lakh, we end up setting it at 12 lakh or 15 lakhs, for example. And the number of alerts that come out are very, very high because we want to cover everything. But in effect, what happens is that the team or the individual who's closing the alert, they're not able to do it on time. So there are two options, like Saili said. We either go and close them at bulk, or we let them be where they are. And in both cases, that's not a good thing to do. I think we have a question here. Currently, brokers with different lines of businesses under one PAN are not able to register on portal on FIU 2.0. Is there a solution for the same? Yes. I think the FIU has a help desk that they have created, and any challenges in terms of registration can be resolved. I would recommend that any members facing a challenge on registration may actually write to ANMI. We did that last month, where some member institutions were facing certain challenges. So what you may do, Mahesh, is we can collect all this at your end, at ANMI end, and we can then take this, information to FIU in a consolidated manner,
Right.
And then they will be able to resolve it for us.
Absolutely, absolutely.
Yeah. I want to actually talk about a little bit on the FinNet 2.0. The FinNet 2.0 is a very evolved version. So for many years, it was FinNet 1.0, and now it is FinNet 2. This new version has a lot more details to capture. So for example, along with PAN number, giving CKYC number is also present now, right? Now, what happens with this CKYC number, and I'll just talk a little bit on that, is today, if there is an investigation, right? And let's take any public investigation like a Sheena Bora case, right? Or the Mukherjee case. You could take any case, right? There's a financial crime, or there's a crime that has happened. And many of these crimes have, the motive. In fact, a large percentage of crimes, the motive is finance. It's money behind it, right? And as an investigative agency, one of their biggest challenge was, how do I find out the financial assets of a particular individual, right? So let's say, you're the police officer, there is a crime scene, you walk in there and you realize that there is an accused. But how do you know the total, let's say, demat accounts or bank accounts or insurance policies of this particular individual, right? How do you know that? It's very, very difficult. So today what FIU does is they send out something on the FinNet portal 1, and all 10,000 reporting entities, including 1,000 brokers. You go in, you check whether this person is your customer, and you report them. Okay? Now, we know it's challenging because not all of us actually go in every day and check what information they want. So the investigative agencies don't get information on time. Now, central KYC changes that, which is also under the PMLA Act. So now you could actually go and check on the CKYC registry. The information is available, you as in the investigative agency, not the reporting entity like you or me. You can put in one CKYC number, and the CKYC registry can, tell that this CKYC number is the customer with these 3 cooperative banks, with these 2 brokers, with these 5 insurance companies and 2 NBFCs, right? So now the finance intelligence unit or the investigative agency just needs to reach out to these 18 institutions, right? And imagine when they reach there, the bank says this customer has, 3 lockers, 7 fixed deposits, right? And imagine how fast, they can get to this information, which today they are doing physical raids of trying to find those passbooks and, where those lockers are and things like that. So the world is really, getting connected very, very beautifully. These FinNet 2.0 captures a lot of information about it. The second unique piece on FinNet 2.0 is a compliance score that they have created for each broker and member. What it means is that based on your quality of STRs, based on your quantity of STRs, and the effectiveness of the STRs, they are internally going to give you some scores, right? So it's not just you who's monitoring your clients based on the trades that they're doing. It's the FIU that has, evolved, and they're coming up with this compliance score. The third thing, which is again very nice, is they've now extended you to upload documents in FinNet 2.0. So for example, if you report an STR, today you're just giving data. But if you have a 2-page PDF or a 3-page PDF where you want to describe a larger story, then in that case, you will be able to submit documents which will be better for you and for FIU, because they'll be able to go through those documents and get larger information or enriched information out of it. So yeah, I think we have one more question. Chaitali says, okay, we need to change principal officer and designated director periodically. Okay. I am not sure on this, Chaitali. I can check and come back. Nothing that I know of where there is a mandatory requirement to change a PMLA principal officer and designated director. But I will make a note of this and we will come back to you on this one for sure. So far, in my knowledge, I have not heard anything of this sort. Okay. From last month, we are receiving new media script concentration alert from the regulator. Do we get these alerts in our TSS portal? There is a script concentration scenario or typology that is available in TrackWizz, and we will reach out to you with more information on that, Namrata. Okay, this is a great question. Is there any standard threshold percentage for AML alert generation? So it's a lovely question. See, and I commonly experience this, me and Saili, when we are working with many of you, there's this common question, right? I know of my other broker friend, they generally generate alerts at 10 lakhs, right? And it's right, because then you want to adopt the same 10 lakhs. Now, there are 2-3 things that vary here. One is whether the kind of business model is same or different for you. So let's say that you are an offline broker, right? Where you are generating business on the good service that you're giving. Your focus is not a discount broker, right? I mean, you don't want to be a discount broker, but you're an offline broker. You are engaging more with your customers, right? And there is an interaction that happens versus, a discount broker who's completely offline, right? So in that way, the channel in which you are connecting with your customers is different. So naturally, what we feel is that this should be taken into account, and maybe your threshold should be very different from what a discount broker or a other broker, based on the region, based on multiple factors, what it is. The second thing is also about if I may say, the actual percentage of alerts, right? Now, there are 2 ways to generate alerts. One could be, you may say, look, here are, 2 people team that I have created, and how much, can we take? So we can get 600 alerts a day, but we will not be able to process it. But how about getting 60 or 80 quality alerts a day, right? So I think there are, it's a risk-based approach. You do an assessment and then you say, okay, 35 alerts, 50 alerts, 100 alerts a day. And based on that, you kind of set your thresholds, and then you get the alerts. Now, a very common thing, right? And this is very peculiar about stock markets. We are in some form of a seasonal business, right? So Mahesh, when the markets are roaring, we typically get more volumes, and all of a sudden that threshold that you had set, which is like Saili mentioned, starts generating more number of alerts, right? So your team is the same, your system is the same. Unfortunately, your threshold is also the same. The business has gone up, so the alerts are increasing. So the periodical review of these thresholds, it's very important that they be reviewed, and you keep recalibrating based on multiple factors. Okay. I'm guessing.
I think Sagar, we can do white labeling also, right? So
oh, yes,
we are getting some alert regularly, and we know the investor is proper, and we need to allow him. I think we can do the white labeling also, right?
Yes, I think that's a big one, Mahesh. So, for example, if there is a customer who gets in, large amount of money, and you've done your due diligence, like Mahesh mentioned once, and you realize, no, this person is actually, the net worth is worth 50 crores. Then you need not, then you set in the system saying, look, please don't give me any alerts of this customer for this up to this amount. Or when you see something where somebody is researching on a stock, and then you get a script concentration alert, but you realize, okay, this customer, he's researched on this stock. So for the next 1 year or 2 years, for Mahesh, I don't want an alert on a particular stock. So yes, that's absolute white labeling, and that comes in very, very effective, because in certain scenarios, we've seen about 18 to 20% are repeat alerts of the same customer. So yes, that's a low hanging fruit. Yeah, thank you, Mahesh. That is a good insight. Okay, we have Amit Jain saying, please arrange a session for FinNet 2.0. Yes. Yeah.
I think many people are having operational issues for getting a registration on FinNet 2.
Yeah, I think Mahesh, a survey like a Google form to see, have you registered? Yes, no, and are you facing a problem? Something of that sort, maybe.
Fine. We will get it. We'll get it.
Yeah, that would be helpful. Yeah, what would justify the benchmark or industry practice to generate the alert? Excellent question, Mansi. See, the whole AML, and I simply would like to call it, is finding a needle in the haystack, right? So you're finding something very small in a very large number of transactions and customers. The expectation is that whatever you are doing it in spirit. There is some trust and faith in what you're doing. Now, I'll give this to you with an example that you are asked to justify only in a certain situation. Right? That please explain, how did you arrive at this? Typically, that happens either as a routine audit where somebody has come in and FIU has, in the last few months, we understand, reached out to some of you to understand what your process looks like. Right? Now, when somebody is asking to justify, I think if you know that you have been filing STRs, there is a system, people in place, and you can actually demonstrate that. And trust me, the biggest demonstration is filing of STRs. Okay? We've seen in general that regulators, which is human like us, are considerate when they see that STRs are being filed. Okay? We've generally seen them, and which is, if you and me were a regulator, we would also ask a question to say, why are you not filing STRs? Then you point and say, oh, because there are very few alerts. Then they say, what is the threshold that is set? And you're saying, this is the threshold that is set. Then they'll be like, how did you set such threshold, right? When you're not getting alerts and there are no STRs filed. Right? So we've seen that in general, the justifications are asked. in a very serious manner only when things don't look right. Otherwise, it's more to understand the rationale behind it. And I would strongly recommend of not using any industry benchmarks. The industry benchmark could be towards the conversion of alerts to STR. So, I mean, your alert to STR ratio should be a reasonable percentage, right? I mean, you can't be generating 10,000 alerts and filing one STR, right? That ratio is some form of an industry benchmark, which could be X percentage, right? But it can't be less than like 0.5% or 50 basis points. So that's a benchmark. But that is a good question. Thank you, Mansi. I think do we have time for one more, Mahesh? And okay. Yeah. So Mahendra Pardesh, can you please brief on synchronized trading and reversal trades? Okay. So Mahendra, typically in the market, these are called as 1, 2, 3 trades. And I'm sure Mahesh, you can also throw some light over to you for this one.
Synchronized trading. I think that is not allowed only. Means you can get, I think you will get on a day one only. Now the systems are all in place. You will get the alert on the same day from the exchange only.
Yeah, it's basically a pre-arranged trade, like Mahesh mentioned. So you have one individual at one end, at one broker A. You have so let's call that person as Karan. Then you call somebody as Arjun, and you have that person on the other end and another broker, right? They are on a phone call and they typically say, I'm going to put in for buy, you put in for sell, and the trades get matched, right? So that is basically a sync trade. When they reverse this trade after a few hours or few days, so now A actually sells and B buys, that's called a reversal trade. So they bought on one bought, one sold, and after 2 days they reversed it. So that's a reversal trade. So typically in the markets, we call them as 1, 2, 3 trades.
See, now I think exchanges are, they monitor all the trade and they give the difference also that these are the amount you gain or loss, and with the penalty it comes. So I think people should avoid this. They should not avoid.
Yeah. And one thing as a closing remark, right? I mean, the times that we are getting in, where the world is getting more and more digital, I think for all of you who are excited about fighting financial crime and compliance, you guys have great career opportunities. Because as the digital world grows, the governance also grows. And with that, what are needed are experts like all of you. So yeah, I want to wish you all the very best, and thank you, Mahesh. Thank you, ANMI, for arranging this.
Yeah. Thank you, Sagar bhai. Thank you, Saili, for running through a full alert management presentation, and Sagar bhai for giving all detail for the FinNet 2 and the few example and the question answer for the alert management. So thank you very much from the ANMI members. Thank you.
Thank you.
Thank you.